Hey everybody, Daniel Ramsey here with MyOutDesk, and I'm excited. We got Scott Groves here, and what's cool about Scott is he's a mortgage professional, he's a coach, speaker, author. I have his book, I have his shirt. I'm wearing my shirt today, though. I really should be wearing his shirt. And Scott, thanks for being here today.
No, thanks, man. I really appreciate it. I know this group is going to go, or this video is going to go out to my coaching clients and some of your people and whatnot live on Facebook. So if you're watching this at any time in the future, thanks for taking 20, 30 minutes of your time to tune in and listen to Daniel and I riff on something. I don't even know what yet.
Well, we're going to talk about everything mortgage, like how to build a real mortgage practice. And that's what's unusual about what you've done is you've got a coaching platform and a mortgage company. And so you're one of the people who are actually in it, living it every single day. And so we're absolutely going to extract all the value that you have out of that brain and drop it for the audience. So I'm excited for that. But let's start with how you got started. Like what's your origin story? Like how'd you get into the mortgage world?
I can't tell the same boring origin story. Like I was in it for 9 years after I got out of the Army, rada, rode the wave up at Washington Mutual, crashed and burned like everybody else. Read the foreword of the book. A foreword worth reading. I was basically, almost bankrupt, $500,000 in debt. Everything sucked, living on a buddy's couch. That was so many loan officers in 2009, 2010. I just feel like it's the bad DC version of the origin story. It's not the really solid Marvel origin story. So, that's just kind of what happened to everybody that was in the business. And then after 2009, started to rebuild my business. Thank goodness I knew how to read tax returns because I think a whole slew of loan officers got cut out in 2010, 2011 when they realized they couldn't do stated income anymore. So just, started rebuilding all purchase centric and then, doubled my business from 2010 to 11 to 12 to 13 to 14, worked for some great companies and now partnered up with a gentleman named Justin Bale and kind of just doing our thing. We're out of Los Angeles, California. So the loan amounts help a lot with the volume, although our payout per loan is a little bit lower. But we'll end up doing, my business partner and I will end up doing about 200 loans this year for like 120 million, which is a really good living out here in California sometimes. After taxes in California, as you know, that's about $12 that we'll both make.
You're making minimum wage.
Making minimum wage, funding 120 million a year, but that's okay. Yeah. And then, a few years ago when I was at a company called Movement Mortgage, I was their number one guy by volume. And you know how this goes, Daniel. When you're successful, people start calling you, hey, can I get 5 minutes? How do you do this? How do you do that? What are your thoughts on this? And those 5-minute calls turn into half-hour calls, and then your whole week is gone. So kind of accidentally about 5 years ago, I said, all right, well, why don't we get the 20 people that keep calling me on a Thursday morning call? And then that's evolved into a coaching program over the last 5 years. And it's funny, it's actually profitable. I really started it just as a way to have a tax write-off against my W-2 income and be able to write off all these personal development and professional development courses I was going to. And then who knew there was actually an appetite for kind of what we were doing in our space. So that's basically how the last 20 years have gone in a nutshell.
That's awesome. Talk to me about the reason you did your first loan, or like, why'd you get into it? Like, I want to hear that original, like, I'm going to be a mortgage guy.
All right. So this is actually kind of a funny story. I got out of the Army, and at the time, Washington Mutual had this deal for veterans where if you were going to college part-time, or if you were going to college full-time, you only had to work part-time at Washington Mutual and you would get full benefits. So ex-girlfriend of mine or something from high school called me and she's like, hey, I'm an assistant branch manager at Washington Mutual. You should come be a teller. You only have to work like 20 hours a week and you get full benefits and we'll help reimburse you for some college stuff. So I went and did that, and I was going to Pasadena City College using my GI Bill and whatnot. And about 60 days into being a teller, my good friend and the assistant manager came to me and she's like, well, Scott, here's the thing. You're really good at talking to clients. And we know that you're not stealing because you wouldn't steal a buck here, 37 cents here, but you're always out of balance on your cash drawer. And I'm like, yeah, come on, guys. Clearly, I'm not stealing like 37 cents a day. Like, does that really matter? And they're like, that really matters when you're a bank teller. And so she said, we can either fire you or we can promote you into this program to learn how to do loans because you're really good at talking to the clients. And so when it was between a promotion and a firing, I took the promotion, started doing loans in 2000 and kind of rode that wave all the way up and then crashed like everybody else. And now kind of riding it back up again. We'll see what happens.
That's crazy. Okay, so let's dive in. What when you're helping somebody consider what it would take to double their mortgage business, like how do you focus in, and what are some of the keystone habits or things that you always look for and or help somebody implement for a mortgage professional like yourself?
Yeah, it's a great question. And the first thing that we always want to do is try to focus on somebody's strengths, right? So when I'm coaching private coaching clients, and then I try to extract this into our more, online, bigger group coaching program, is if you're in any sales profession and you're not doing the amount of business that you think you should be doing, it's usually because you have a strength and you have a weakness. And everybody needs their clients to get to know who they are, trust them enough to send them that first deal. Know who they are, like them enough to send them that first deal, and then trust them based on how that deal went in order to send them more deals. So I always ask people like, hey, what are you best at? Are you good at getting out there and meeting the people and doing that guerrilla marketing to get people to at least know that your name is Scott Groves, the lender? If that's the case, let's double down on those efforts. And then let's build a coaching curriculum to help you in the, okay, now they got to like you, now they got to trust you stage. Or a lot of times people will say like, Scott, I'm really strong at my loan process. I know the guidelines. Once somebody works with me, they want to continue working with me and they trust me enough. That's my strength. So then we just kind of, reverse engineer like, all right, well, if by the time you get somebody in the pipeline, they love working with you, how do we get more people in the pipeline? So it's really picking that point of strength and then kind of building around that versus, a lot of coaches are, the kind of, what's the old saying? Beatings will continue until morale improves. It's like, let me whip you and flog you into doing the 3 or 4 things I think you should do to double your business. And that's not really what this is about. It's about finding what you're good at, building on that, and then, finding either other people or other systems to supplement that weakness. So that's kind of the first stage. And then there's just the good old generic, daily activities, calling, that compound effect stuff to start making your business better. So, that's kind of where we start. And then that's what our jumping off point is.
Right. What's the, in your business today, what are some of the secret sauces that you employ to drive that, 120 million, 200 deals? That's a big deal. It's a lot of mortgages in California. Yeah. That's a lot. So what are some of the things in your business that you rely on to drive revenue and really have you guys operate at a high level like you are?
So for only $999.99, I will give you the secret script that changes your life. The 5 secrets to mortgage origination. I tell people all the time, Daniel, I give this keynote speech on lead generation. And what I do is I have everybody in the audience. I say, hey, if you're married, girlfriend, boyfriend, baby mama, booty call, whatever you want to call it, if you have somebody special in your life, stand up. Just about everybody stands up. And then I say, okay, tell me if this story has ever happened to you. And I've got a whole audience of several hundred people standing. I'm like, tell me this has ever happened to you. Your spouse, girlfriend, boyfriend, whatever, comes home and says, oh, hey, cousin Jimmy or Blanca at the office or Debbie, my college roommate, they just bought a house. We should go over there and check it out, or go to the housewarming party, or go to the pool party. And you're looking at your spouse saying, wait a minute, why didn't I get a shot at the loan? I've met that person. I've had dinner with them. I've picked up a tab here and there at the half hour. And so then when I ask the audience that, 95% of the audience sits down because everybody's had that experience, right? Where a product you sell, somebody very close to your spouse has bought that product and not used you. And what I tell people is, guys, you're not even famous enough with the person you're sleeping with to get all of their referrals. Why are you going out and spending thousands of dollars on Facebook ads and flyers? And, I've had loan officers before tell me things like, well, if I could just get the down payment assistant flyer with the right color, that would really double my business. I'm like, you're insane. You're focusing on all the wrong things.
Yeah.
So in our coaching program, we have a couple things. Like, I think to make that first 200 to 250,000 in sustainable, repeatable business, you've got to be famous with 50 people. And what I mean by that is, if you're famous with 50 people, famous with your spouse, it means when the subject of real estate or mortgages or finances come up at work, they ask to interject you into the conversation. If you have a dental hygienist or an insurance broker or a CPA, if you're giving people money and those people talk to other people, they should be giving you a referral from time to time. Now, look, this gets a little awkward because some people think that we go down that road of, I only have usury relationships. I'm only friends with people that refer me business. But you and I are a perfect example. Like,
yeah,
you've done a really good job of keeping in touch with me and becoming famous with Scott Groves. So I've been able to refer you over 5 or 6 people, because when the idea of staffing comes up, I just know Daniel is famous in my mind when it comes with anything HR, staffing, scaling, anything like that. And so if you're famous with at least 50 people, and I've got a whole worksheet on how they can fill this out, 10 realtors, 10 listing agents, 10 CPAs, like that in and of itself will lead to a couple $100,000 in income. And then it's just a matter of using something like this. And I don't care if you use mine, you can send this out. It's just a matter of using something like this call tracker to make sure that you're strategically staying in front of them. So there's no secret sauce. There's no magic script. There's no Facebook funnel. There's no Instagram ad that's going to make loans fall from the sky. Because guess what? Quicken has that market just
on lockdown. Yeah.
So as soon as you, the standalone loan officer, can compete with Rocket Mortgage, then good. Go buy some funnels and shit. Until then, stay in touch with the people Pick 50 people you want to be famous with.
I heard somebody, a little twist on that. It was pick 50 people who are also salespeople. If you go to a CPA who's like, well, I don't know if I can give you your name out as a recommendation. I need to give my clients 3 other recommendations. I could never say anything personal. That's not the person you want in your 50 people, Right. You need people who you can be famous with, who are also business owners and will be reciprocal in the relationship,
Yeah, if my CPA said some shit like that, I would say, okay, cool. Well, then what I'm going to do, this is the CPA I'm paying personally. I would say, okay, cool. Then what I'm going to do is I'm going to give my taxes to 3 CPAs. You guys do all the work and send me the final numbers for what my return is going to be. Then I'll pick one of you who I'll pay for your services and send in my tax returns. This idea, this urban legend that people have to give out 3 cards is 100% BS. It's complete malarkey. There is no saving grace for giving somebody 3 names of people that are shady, or there is nothing negative about giving 1 name of somebody that's ethical. And so what I always tell people, because I get this all the time, Daniel, sorry to go down this rabbit hole, but this is a big,
I love it.
I tell realtors all the time, I'm like, hey, that's cool, whatever you have to do to feel comfortable. But just so you know, that's not a law. I'd be happy to send you some information on that. And then number 2, let's just take this to its logical conclusion. I remember having this conversation one time with my buddy Dan. I'm like, Dan, do you think if you give out 3 loan officers to your potential buyer and one of those 3 loan officers screws up, do you think the client's going to say, you know what, Dan, you gave me 3 options and clearly I picked wrong. I'm not upset with you. I'm just upset with the lender. Of course not. They're going to say, Dan, one of the guys you gave me screwed things up. You messed up. You're a mess, because this is the thing that the realtor always thinks they're trying to avoid. They think they're trying to avoid the conversation of like, well, if you screwed up and you're the only name I gave them, then I'm in trouble. I don't care if you give them 100 names. If you gave them the lender on your list and they picked one of those lenders, Mr. and Mrs. Realtor, you're in trouble. So, Mr. and Mrs. Realtor, what's in it for you? Dan, for example. Dan, wouldn't it be much nicer if you only had to make 1 phone call a week to review your entire pipeline, go over everybody that's pre-approved, all your deals under contract? Isn't that easier than trying to chase down 3 different lenders, try to keep straight who's doing what? Like, give me a chance, give me an at-bat with all your clients. I won't let you down. And sometimes it works and sometimes it doesn't, but it's worth having the conversation, because this idea of giving out 3 lenders, like I won't even work with those people anymore.
So when you are reaching out to these real estate folks and these 50 famous, was that your pitch right there? Is like, look, I'm going to take care of your people. Give me 1 shot and I'll do a good job.
Yes and no. And I preface that because, of course, we always need that first shot at a deal to impress somebody. We always need that first at bat to shine and do a great job. But I always am hesitant to recommend that, because we know what happens, right? You go out there, you put your name out to a bunch of people, and there ends up being this negative self-fulfilling prophecy. So if you put yourself out as, give me your poor, your weak, your tired, your bad credit scores, the people that have been turned down 5 times, more often than not, guess what? Every other lender wants to make money. Every other lender wants to close deals. So if a deal is declined, or a deal can't work out, or somebody can't figure out how to pre-approve a client,
there's a reason.
Chances are the deck is stacked against you.
Yeah.
Now, if you're really seasoned, or you have some secret sauce, or you have some great product offering through your company, great. I expect you to be out there talking about that and saving deals. But this idea that, excuse my language, but this idea that I'm going to take everybody else's dog shit deals and turn those into raving fans, that's usually not the case. Usually what we do is we take the dog shit deal, we piece it all together, we fight the fight, we find a way to close the deal. And because we close 2 days late, the realtor's like, nah, I'm going to stick with my guy. You didn't do a great job. Or the client's frustrated. We've all had those deals where it's like, there should be a parade in the street for Scott Groves figuring out this financing. And instead, I'm getting a 3-star review because, well, we had to change the date of our movers. And it's like, you shouldn't even own a house right now. So when I ask for that first at-bat, I always preface it of like, hey, if our first couple at-bats are going to be the tough deals, I need some grace, no tight contingencies. The closing date might be a little bit fluid. I might have to have your client pay off some debt to qualify, but I'm going to set those guidelines up front right away.
Yeah.
Because any lender watching this knows that, in the first day of escrow or under contract, if you're not in California, not in escrow state, in the first day of the contract or the first day of the pre-approval, anything that I can discover is the client's problem, is the client's fault.
Yep.
On day 10 of the transaction, anything I discover, that's my fault. Right. So we better have it dialed in up front if we're going to be winning relationships through taking those tough deals. So long answer to your easy question as usual. Sorry.
No, it's great. I was with another friend of mine last week, and he's a title guy. And I made the mistake, because I'm a real estate broker. I was a mortgage guy at one point too, back when it was easy, right?
Right.
And I made the mistake as an agent of not understanding how much value I brought to my lender, my title person, my escrow person. I just gave these guys business because I liked them. Like literally, I worked with my escrow gal because she was awesome, and we'd go drinking together, and we had a lot of mutual friends. And I didn't realize that I had brought more than $1 million a year to her business in revenue. Like I had no clue. And so I was talking to this title guy, and he's like, I partner with some of the best real estate people in the country. And then we use the money that we have together to go grow each other's business. So I'm curious, in the mortgage space, what can you do, and what have you been doing to really partner with real estate people to really help each other grow over time?
Yeah, this is a really tough conversation because, unfortunately, starting with Zillow, cold calling literally every realtor in the country until every realtor, was beat into submission and bought some Zillow ads or blocked them and said, don't ever call me again. Starting with Zillow really set this precedent of realtors should have a usury relationship with lenders.
Yep.
So, Zillow would call realtors over and over and over again for years saying, hey, you need to sign up for Zillow ads. And if you have a lender who's worth a shit, he'll pay half of the ad spend.
Yeah.
Well, there's a couple things we could go down the rabbit hole of like, is that really RESPA compliant? Because let's be honest, most lenders out there who are paying the Zillow ad spend, it wasn't just to advertise on Zillow. It was with the expectation of like, hey, I'm doing this as a little bit of a kickback to get your other business, the good leads, not just the online leads.
Right.
So there's some compliance concerns there. And then also, I don't know if I want to be in a relationship that's only predicated on spending money, because eventually somebody will want to spend more money than me, or exactly as the mortgage banks were predicting, Zillow used that ad spend from realtors and from lenders to now create their own real estate and mortgage company. So, everybody who ever spent money in Zillow, and I was guilty of it 4 or 5 years ago, we basically just funded a startup company to become our competition. We've seen the same thing with a bunch of the other online services that aren't even worth mentioning. So
talk about realtor.com. I mean, we used to own that.
Yeah. Now it's insane what's happened to realtors. You're paying an MLS feed to create this feed, which is now being resold to Zillow or Redfin or whomever, so then they can send it back to you. So the realtor's really getting screwed in this equation, and I'm sympathetic to them. If I had unlimited money, I'd be happy to spend unlimited money on all my realtors. But, I think we've got to get back to this idea of a good lender-realtor relationship is a lender who will, stay communicate. I hate that word. They will stand by their word, meaning if they issue a pre-approval letter, that's a deal that can close, and then close the deal on time. Because I think it's kind of lost in translation that nationally, I think the National Association of Realtors has pulled this, nationally, still over 20% of deals fall through because of financing issues or issues with the appraisal where the lender didn't bring in a local area expert that could help bring the appraisal in at the contract price if it was validated, which most times it is. I mean, realtors aren't selling property way over the asking unless it's justified. So, I'm trying to constantly remind my realtors, like, hey, there's going to be somebody who's going to offer to pay for this. And there's going to have somebody that has this super cool flyer program. And there's going to be, some new startup that's willing to do this. Really, all that matters, Mr. and Mrs. Realtor, is that your client, if that's the house they want to buy, that they can close escrow or close the contract. And I think we've got to get back to that a little bit, because I think it's been lost in the fact that, like, oh, well, every lender can just close, right? And they can close on time and they know what they're doing. So now it's become this commodity business, and what's the rate? What's the rate? What's the rate? What's the rate? Well, the rate is not the most important part of the mortgage transaction. The most important part of the mortgage transaction is, can you close the mortgage, which still doesn't happen 20% of the time nationally, which is insane to me. So what we've been doing a lot of is investing money where we can get back into the community. So if there's a charitable event that a realtor wants to help co-host, we'll jump in and help with that. If there's something fun where we can get out and meet some of our clients face-to-face, an appreciation event or a holiday party, or one of our preferred partners just did this trick-or-treating thing on the boulevard where their office is. That's cool, because that allows us to connect with the community where we're doing loans, meet some of our clients in person, which we rarely get to do on the loan side, spend some quality time with the realtors. That's the stuff we're really looking to spend money on. I could care less about the new Boomtown, Commission Inc., Zillow, blah, 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 somewhere where, we're getting tricked into spend money so that some competitor can create a better mousetrap to try to put us out of business. It's just not what I'm interested in.
What is, I appreciate that response. When in your opinion is happening in your industry right now? Mortgages, you mentioned Rocket Mortgage earlier, real estate, Zillow's coming in, EXP. There's a lot of, change happening in our world, and even in your guys' world. I mean, there's shifts happening, big ones. So where do you see the future of the mortgage industry going, and what's your predictor of the future? Like what is going to be the fight over the next 3 to 5 years?
Yeah, this is a pretty unpopular opinion. So
perfect. I'm glad you're sharing it here.
This is a pretty unpopular opinion, and this is going to sound kind of egotistical and narcissistic, but I think it's really important for loan officers to hear. We've just had a 5, 6, 7, 8-year run up of property values, turnover of properties, insanely low interest rates. There's been every indicator for the loan officer to succeed. And frankly, whether it's in our coaching program or people I'm giving advice to or people that are trying to career plan, I'm like, look, if you haven't been making $100,000+ a year over the last couple of years and you're seasoned in this industry, leave now. Like, honestly, leave now and go get trained in another career. And I'm not saying that in jest, and I'm not saying that to be, hyperbolic or melodramatic, but that's the reality, because the Quicken mortgages, the online, mortgage experience, I really think what's going to happen is the business is going to get turbo taxed, meaning that, pick a time frame, 18 months, 2 years, 5 years from now, 50% of consumers out there, just like TurboTax, are going to be able to go on, click a few buttons, their one pay stub, one W-2. It's going to pull all their information from the Ethernet out there, from the ether via the internet. And they are literally going to get, 3 little columns. Pick one from column A, one from column B, one from column C. There's your mortgage. You're done. And then what'll happen is that'll put, just like H&R Block did, that'll put 50% of the accountants, or the loan officers in this scenario, out of business. You will cease to exist in the mortgage industry, or you will go into marketing or be a, low paid processor or something like that.
So how do you stay relevant in that prediction? Jeez.
So the 50% that stick around are going to be the ones that are like the more boutique accountants. I'm sure you're in the same spot. I pay my accountant an arm and a leg to file my taxes because I have a separate corporation for the coaching. My expectation is I can call him mid-year anytime for tax advice and he's going to pick up the phone. So I pay him, a king's ransom, whatever he wants to file my taxes. I probably pay him 100 times what TurboTax costs now, 20, 50, $100, whatever it is, because I want that access to knowledge. I know that throughout the year, I might have some tax planning. There might be a different product on the table. It's going to be the same exact thing in mortgages. So if you can niche down into your product, you can really be a debt consultant, which is what Barry Habib's been talking about for a couple of years. Those 50% are going to survive and probably thrive. And again, this is the part that sometimes comes across a little obnoxious. Like if I lose 50% of my income over the next couple of years because the market goes through a massive transition, I won't be happy, but my family will still eat. If somebody's making 70, 80, even 90, maybe $100,000 a year, and they take a 50% cut to their income, nobody's going to stay in this crazy business with this level of stress for 40 or 50 grand a year. Yeah. So I really thought what I'm talking about was going to happen in 2019 and 2020. What ended up happening, as you know, is rates dropped dramatically and unexpectedly, and it threw a lot of loan officers and a lot of companies a lifeline. And so some people that probably should have washed out over the last 12 months or the next 12 months are still sticking around because rates have been so low. But I'm not kidding. Like the future of the industry is 50% of business is going to be Quicken, online, digital loan officers that'll work for $100 a file because it literally takes them 30 seconds and they're just rubber stamping the 1003 because compliance says some loan officer has to sign this thing. Or you're going to move to that boutique offering and have a very wide product knowledge. I don't think there's going to be a lot in between.
I love that. Question, how do you run let's walk through your operation real quick for the audience. I want to understand the right way to build a mortgage team. Like, what does it look like as you grew from where you are today to let's cut it in half and then let's cut that in half? What were the steps that you kind of built up in order to build a team and have as much success as you've had?
Yeah, so I'm going to go back in time about 5 years. Myself and my business partner, Justin, we both have young kids, 2-3 years old. He does a lot of property investing. I have my coaching business. So we kind of decided that we were going to, sorry, there's a birthday party going on out there. One of our team members is having a cake. Nice. We decided that strategically we were going to do less on an individual basis because we wanted to focus on other parts of my life and other parts of his life and other business ventures. So probably our business model isn't the best for people to replicate off because we're trying to take our foot off the gas instead of just crush the world. So let me go back a few years when I was doing the most business individually, which I think my best year was I know my best year was 98 million. I never hit that $100 million mark on my own.
You're upset. You're upset about that.
I'm very upset. So I think the very first thing you have to do is you have to find somebody to take some of the busy work off your plate. And this might be the personal busy work. This might be hiring a virtual assistant, a virtual professional in order to take a lot of those, lower paid tasks off of our plate. For example, one of my first coaches in the business was Todd Duncan, who's a great guy and a great coach.
He's in Sacramento, right? I think
he's actually down in Newport now, but
okay.
He does a lot of events in San Diego, really big in the industry. The first time I met with him, he's like, Scott, we mapped out how much money I wanted to make and what my hourly rate was. And he's like, Scott, would you pay somebody $100 an hour to go run errands, pick up dry cleaning, run by Target, make photocopies? And I'm like, no, that's absurd. He's like, okay, well, your time, if you're doing the strong activities that you can do to lead generate, your time is worth $100 an hour. Anything that's worth less than half of that, hire somebody else to do it. And I know how easy it is for me to say this now that we're managing our own P&L. We can hire ahead of demand. When you're making $50,000, $60,000, $70,000, $100,000 a year, and you're like, all right, well, I'm going to take a $25,000, $35,000 hit to bring in a virtual professional or an on-site admin. That is scary as shit. But I'm telling you, you have to hire ahead of demand and grow ahead of demand, because if you don't, what everybody does is they wait till they're at 110% capacity. Then they try to hire somebody. They have no time or energy to train that person. Yes. And then that person fails and you're like, well, see, this is bullshit. Nobody can do it as well as me. It's like, no, you hired too late in the game and you couldn't train that person to do things as well, or at least 80% as well as you. So the first person I ever hired, I didn't have money to hire them. I had a 3-bedroom house that I was hanging on to by the skin of my teeth. I found a gal in exchange for room and board would work 20 hours a week for me. So I let her live in one of the rooms for free. She could eat any of my groceries, but she had to like run all my personal errands, walk my dog, do photocopies. You know, I got about 4 hours a week of work out of her. That opened up the floodgates to make more money. And then I hired my first full-time assistant, and then a full-time loan officer assistant who knew tax returns, and then a second loan officer assistant who knew more about tax returns. And, you know, it just snowballed, and we were able to get to almost $100 million team, which was like 180 loans that year with 3 people. And so, you know, hire ahead of demand, find that first hire. If you're, you know, find some way to get them. Like I said, I offered them a bedroom in my house. You don't have to go that crazy, but get some money from your company, pitch in some money from your paycheck, get that first $15 to $20 an hour employee who can take a shit ton of stuff off your plate. And then what you'll find is you can just load them up with more and more stuff, and you can teach them how to be a loan officer assistant. And then you move them up and you slide somebody else in. You move them up and you slide somebody else in. And oh, by the way, don't forget to be nice to them, because my problem is I have lost key employees about every 3 or 4 years because I'm not the easiest person to work for, but I'm working on that. So work in progress.
Good. So know what you're worth, hire before the demand hits, hire when you don't actually probably need them, but plan for the growth. And then it sounded like you had a progression, like, you know, a personal assistant, then a loan assistant. Is that kind of the progression?
Yeah, absolutely. And so now, you know, as you know, because we hired Donna, who's amazing. Right now we have a loan officer assistant that effectively does the upfront stuff, you know, pre-approvals, building the file. We have an LOA who takes the file from contract to close. They work very close with the processor. And then we have Donna, our virtual professional, who does a lot of the marketing, calendar scheduling, email follow-up, pay my bills, submit my expense reports, all that kind of stuff. And then my business partner and I. So quite frankly, at 5 people, we're actually a little overstaffed for the amount of volume and production we're doing. I will use the excuse and the caveat that our loans are getting way more difficult here in LA than I've ever seen them in 20 years. And like I said, my business partner and I are fine giving up that extra money with kind of quote unquote overstaffing, because we've got other things going on in our life, kids and other businesses and things like that. So I think every employee that you add to the team on the mortgage business should help you add about 5 loans. So I have found, 5 loans a month. So I have found most loan officers, they can just grit and bear it and get up to about 5 loans a month that they're closing on their own, taking the pre-approvals, doing all the work, and they're pretty much at capacity. And then to go from 5 to 10, you need that personal assistant, photocopier, you know, kind of highly paid executive assistant in person. Then maybe you go with a virtual assistant, you know, once you move that person up to an LOA. But that next hire, virtual professional, moving your guy or girl in-house up to an LOA, that can get you to about 15 loans a month. And then personally, I've never been able to scale past about 20, 22 loans a month. So I don't know what that looks like. I'm not core competent enough to speak about that. But I think 3 to 4 employees plus yourself will get you up to about 20, 25 loans a month if you're doing it right.
Yeah. What we're going to wrap up soon. You've got a giveaway. It's called the Loan Officer Call Tracker. So we're going to talk about that real quick, and then we're going to cut. But talk about this, because you use it and you teach your folks to use it. How has it helped you really grow and focus on your business?
Focus is the key, right? Like, I don't care if you use this. The Core calls it the Greatness Tracker. Brian Buffini calls it something else. Todd Duncan calls it something else. There's a reason. These are all, you know, all the weeks that we've gone through this year. Let's see. I've got them all here. These are all the weeks of my calls. Wow. And some weeks are better than others, but it's really important, and strategically and psychologically, there's a reason. It's printed out,
writing them down,
8.5 by 14 in red. It's always, this clipboard is 100% of the time within arm's reach of you know, myself and all the people on our team. So it just sits on this clipboard. There's something, you know, we are inundated with digital input these days. The emails and the clicks and the blips and the tweets and the bleeps and all that shit. So having something, I have found, and most of our coaching clients have found, having something physical right by you where you're writing out, okay, here's my 3 buyers calls for today. Here are my 3 new realtor relationship calls today. I called at least 1 listing agent. I try to get face-to-face with 2 people a day. Just, I don't know what it is, man. That little physical representation of what we're supposed to accomplish every day, it keeps me focused. And I can always tell when our coaching clients are taking this seriously, because they'll start filling this up. And I know that they've seen something where they're like, okay, I printed it out. I committed to it, because I always get the email, hey, Scott, I'm finally making the calls, even though I've been in the coaching program 3 months. What are the scripts? What do I say? And I'm like, oh, watch this training video, watch that training video.
Yeah.
But it's really funny because I can tell when people's business is taking off, because they actually start making the calls once they have the physical representation here on the desk. And if anybody wants a copy of this, you can email me at Scott@Consolidated Coaching, Scott@Consolidated Coaching, no fancy spelling there, SCOTT @consolidatedcoaching.com. And I'll be happy to send you this stuff. Oh, cool. It's in the notes.
We'll put it in the notes. Yeah. Along with your loan officer call tracker.
Perfect.
Okay. So let's wrap up. What's the most valuable advice you would give to a loan officer who's wanting to go to the 20, where you kind of hit that 20 loans a month is a big deal.
Yeah. Really big deal.
What's that one piece of advice or that one thing you'd like to leave the audience with in terms of driving and growing a mortgage company?
Yeah. So there's 3 things actually. Sorry.
Of course.
The first thing is I would enroll your spouse or your family or the important people around you to see if that's what you really want to do, quite frankly.
Okay.
Because, there's a lot of loan officers who are quietly and not, boastful on social media, closing 5 or 10 loans a month, making 200, 300, 400 grand, which, in their market area, even in LA, is a really great living. And they can do that with some balance and some sanity and still taking care of their health and their family and whatnot. So if you really, and let's be honest, if you really have an ego around this idea of getting to 20, 25, 30 loans a month and, being top 1% in the country, I would first talk to the people that are important in your life to make sure that they're on board for that same journey. Because no matter how systematized you are and how great your staff is, there's going to be a lot of late nights and happy hours and some weekends worked, and there's going to be some sacrifices. So that's the first thing. The second thing is, I don't care if it's through Consolidated Coaching, The Core, Todd Duncan, Brian Buffini, Next Level LO. There's a lot of good coaching programs out there. If you really want to get to the next level, you have to get coaching from somebody. I could put my sister, who manages apartment buildings, on the phone as a mortgage coach. And just the idea that you have to call in and report your numbers and be accountable to somebody, that's usually enough to get people on the next track.
So accountability matters. And
accountability matters. Yeah. We do a daily 8:30 a.m. lead generation call for 10 minutes. And not surprisingly, the people that get on that call every day are the ones that are doing the best in their business. And spoiler alert, I'm not even sharing anything super profound every day. Once in a while, I have a nugget come out, but it's just their commitment to, okay, I'm on this call every day, and then I get over to my lead generation. Just that consistency and that accountability to themselves is a game changer. So like I said, whether it's me, Next Level LO, love those guys, Todd Duncan, The Core, whatever, get into some type of coaching. Okay. And then the third thing I would say is, as you grow, you have to constantly keep front of mind what's in it for the realtor, what's in it for the client.
Yep.
Because I've made this mistake. I have damaged, probably with beyond repair, some relationships with a realtor and a lender, because I started to get cocky and said, hey, this is what I'm doing great. This is my conveyor belt. This is my system. This is awesome. We're crushing it. We're closing deals in 14, 15 days. And I've lost track of what's in it for the realtor or what's in it for the client, or lost focus of, hey, this is somebody buying their dream house, their forever house. Maybe they're the first person in their family to ever own a house. So just as you start to build and grow and hire other people and get people on the conveyor belt, do everything you can to not lose that focus of like that kind of childlike wonderment that comes along with somebody buying their first house or upgrading to their forever dream house. I have not done a great job keeping that top of mind for myself. So it's something we're constantly trying to work into our process, be a little bit more warm fuzzy, which is not my nature. I'm an ex-military guy. I want like everything by the checklist and the conveyor belt. But, just remember, this is a real emotional experience for our clients who are buying a home and for our realtors who are trying to pay their bills with closing these homes. So keeping that top of mind, I think, will serve people at a very high level as they're growing their career and growing their book of business.
There you go. Scott Groves, Consolidated Coaching.
Daniel, I really appreciate it. And you're not paying me to say this, but I've got to say, Donna, who I got through Mod, is one of the best team members I've ever had. Like, her attention to detail, her desire to just please the client and the system and everything else. Like, you guys have hired some great people. So we'll be in touch for more hires in the future. And I think Donna's going to be with us really long term.
Well, now you're making me ask you another question.
Okay.
As a lender, LO, when should somebody start considering hiring a virtual assistant, and what has made you successful in that?
So when your calendar is FUBAR, effed up beyond all recognition, and you start missing appointments and your boss is on you about submitting the expense report and stuff is falling through the cracks, or you're like, oh my God, I forgot to send that bill pay. At the moment that your calendar is a mess, you need help. And the reason for that is we've all had that experience where we've met with a referral partner, we thought it went great, and then we rush out of the coffee meeting because we're going somewhere else. We don't follow up with them. And then 3 months later, we see that realtor closing a deal with our arch enemy. And I'm like, oh man, we had a great coffee. I forgot to follow up. I forgot to put them on my call tracker for the next 4 weeks. Having that virtual professional has allowed me to say, like, okay, I need a half an hour in between each of my appointment. These thank you cards need to go out. These people need to be added to my database. I need them to go on our drip campaign. So just, once you feel your schedule out of control, get in touch with Daniel and hire a virtual professional.
And that's a wrap. Scott Groves, Consolidated Coaching. Brother, thank you for being here. Appreciate you and everything you're doing to help the industry. And I look forward to more of these.
Thanks, man. I'll be up in Sacramento soon to get more tips on scaling my business from you.
Wow.
All right, later, man.